Hello, welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because as Fed Chair Jerome Powell said in today's Jackson Hole speech, the time has come for policy to adjust. And of course, we saw this coming for quite a while now as we've been monitoring the weakness in the labor market as shown by the steep rise in the unemployment rate recently, especially because it's occurred alongside a steep drop in the Fed's preferred measure of inflation, and because of the Fed's dual mandate that they have listed on their website to promote maximum employment and stable prices, it's now become very hard for the Fed to justify these elevated rates when you have aggressively falling inflation while we're seeing an aggressive increase in the unemployment rate. And this is of course the exact opposite of 2 years ago when we had the unemployment rate aggressively dropping while inflation was aggressively rising. So it makes sense that the market is now pricing in a rate cut at the next 3 meetings, one rate cut in September, and then again in November, and then again in December. And we've been seeing that getting priced into the US dollar index for a few weeks now, as seen by this aggressive drop. And this is great for Bitcoin in the medium term because aggressive drops in the US dollar index were a requirement for our past 2 mania phases in 2017 and 2021. And that's also when we saw the extreme risk taking and alt seasons that we saw during those bull market mania phases. And although all of this looks great in the medium term, I don't think we're out of the woods in the short term quite yet because we are still facing that range low that I'm expecting the US dollar index to bounce off of before it finally rolls over, because we've held that support for 2 years and we've seen an aggressive momentum drop over the past 2 months or so. So it would make sense to me to get a bounce off this 200-week moving average, the same one we have bounced off in the past during this uptrend in the US dollar index, and then perhaps we get rejected and aggressively roll over once those Fed rate cuts really get started. This short-term caution also aligns very nicely with our Bitcoin summer chop thesis. We're only 60% of the way through this Bitcoin summer chop phase, so I'm not really getting incredibly optimistic for any kind of parabolic rally until late September or perhaps early October of this year. And of course, this also makes sense with what Bitcoin has done historically. The parabolic rallies tend to start in Q4, and it's nice to see articles beginning to mention that. And of course, that's likely because in election years, we tend to see increased volatility in the S&P 500 as we approach November when the election actually occurs, and it looks like this year is going to be no different. One day we have Trump leading in the polls and it starts to look like Trump is going to win, and then 1 or 2 days later everybody starts talking about Harris leading in the polls, and we know that markets absolutely hate uncertainty. So more and more volatility in the S&P 500 and Bitcoin as we approach that election deadline would make a lot of sense, especially because as of right now, the market is viewing Trump as the pro-crypto candidate and Harris as the anti-crypto candidate. And as if election uncertainty and seasonality wasn't enough, we also are still trying to get through all of the recession fears. First, you see headlines that the SOM rule has been triggered and a recession could be near. And then a couple of days later, you see that economic indicators are fine and maybe there's not a recession after all. And all of these things align to my normal cycle thesis for Bitcoin. I'm still keeping expectations relatively low until the summer chop and perhaps the election and recession uncertainty is behind us. So it's hard to say if we're going to have one last big shakeout before things can really take off, or if we're just going to retest the low that we set back in early August. But I do think that in the medium term, with the easing being done by the Fed and the rate cut cycle beginning to set in, it's very hard for me to not be bullish Bitcoin with that backdrop. And I know there's still constantly people that talk about rate cuts being bearish, and historically, stock market crashes have occurred once the Fed has started cutting rates, but I really think that's ignoring the big picture and ignoring the other player in the room now, which is the federal government with their spending, and the fact that they have spent more in 2022 and 2023 and this year in 2024. Each one of those 3 years individually has been more deficit spending than what we saw to pull us out of the great financial crisis in 2009. So it's very hard for me to be bearish risk assets when we're seeing this much spending from the federal government and the Fed perhaps joining them soon with easing now that inflation is settled down compared to 2 years ago. And this is exactly how we end up with this kind of chart here, where you see the national debt starting to increase very aggressively recently, and we haven't seen the M2 money supply catch up quite yet. But as that debt gets monetized, I would expect us to start seeing an increase in the M2 money supply as well as the Fed goes back to QE and does these rate cuts. So it's very hard for me to not be bullish risk assets in the long term, because we've seen a very clear correlation between the S&P 500 and the US national debt as it gets monetized. And then we know that risk assets tend to be quite correlated, which is why Bitcoin has been correlated to the S&P 500 over the past decade or so. And I think the ETFs are only going to add to that correlation now that everyone can just easily buy Bitcoin exposure in their brokerages where they hold all of their stocks. So I would expect this correlation to only strengthen, and I would expect Bitcoin to continue to perform as a leveraged S&P 500 as investors go out on the risk curve when the S&P 500 is doing well and try to get some further performance via Bitcoin. So although there's a lot of uncertainty in the short term with the different scenarios, is Bitcoin going to break out of this falling channel here? Or are we going to have that last shakeout? Or is the cycle potentially over, which I think personally is incredibly unlikely? It's very hard for me to not be incredibly bullish Bitcoin in the long term. It still feels like we're in another one of those pre-rally consolidations that we've seen going into the post-halving years in each and every cycle. And of course, it's hard to fade the trend we've seen with the S&P 500 over the past 100 years or so, because currency debasement isn't going anywhere. And although there's going to be a lot of volatility thanks to seasonality, thanks to election uncertainty, and thanks to recession fears, I just think that risk assets will continue to do well on larger timeframes, and all we have to do is remain calm, manage our emotions, and not get shaken out. So of course, we'll continue to monitor this. It's hard to tell if 50K was the low for Bitcoin, or if we're gonna get one more shakeout and retest the lower 40K level, which is conveniently when the ETFs were launched, and it's also our 2024 yearly open. So retesting that level would make sense to me, but it's not something I'm betting all in on, because I still think there's a chance the bottom could already be behind us because of how big of a panic we saw when there was that Japanese yen carry trade issue in traditional markets and in crypto. So although I'm still open to more downside, it's not something I'm betting on completely, and I still view Bitcoin as being in a fair value range. It's not a price level that I'm personally excited to buy. I would love to get a chance to buy in the undervalued zone once again, but if we don't get that opportunity, I will just ride my existing positions higher. So we'll see what happens. For now, we still have to see if Bitcoin is going to be able to reclaim 61.5K on a weekly closing basis. That would be the first sign of perhaps some short-term optimism, but as of right now, it's still struggling to reclaim that level, even with the announcement that Powell made at today's speech. But there's still quite a bit of time between now and the weekly close, and then once we do perhaps see that reclaim, we can start talking about some price targets in the short term in that bullish scenario. But it's really hard to come to any conclusions on that until we see that weekly candle actually closing. But anyway, let me know what you expect. Is the bottom already in? And are we going to see Bitcoin rally into the end of the year and break out of this downward channel? Or are we going to have one last shakeout, maybe because of some macro concerns, maybe because something happens with the election that surprises the market? Obviously, there's so many reasons why we can have short-term volatility that we never see coming in advance, but being prepared for multiple scenarios is what we do on this channel. And as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.